Awesome. Hello, everybody. Boris Musheyev here. This meeting is being recorded because I'm doing this via Zoom. All right, recording myself via Zoom. Anyways, I want to shoot this video today and do a small training, I guess, on owner compensation. You as an owner of the business, right? We're going to cover a few things today. Number one, we're going to cover who is eligible for a compensation, which business entity. We kind of covered that briefly. We're not going to delve into details. The second thing I want to talk about is that how you can structure your compensation to maximize your tax savings. So I am going to do something really fancy, and I'm going to try to share my screen from my iPad so I can write and show you things. All right, give me a second. We're doing that right now. It is supposedly connecting. Oh, that's because I didn't launch it. Sorry, bear with me. Let's do it. There you go. Cool. It should work in a minute. Let's see. There you go. Bam, we're here. All right, awesome. So I'm going to get fancy with you with my iPad, and we're going to talk about owner compensation, right? Owner compensation. Excuse my handwriting, but that's what you're going to deal with. Now, who is eligible to receive a W-2 compensation, right? So a lot of business owners get confused as of what is a compensation. When I speak to business owners, prospects online, from the internet, they want to work with us, say, yeah, I pay myself a salary. I'm like, oh, great. So how's your business set up? And very often it's not set up as a type of an entity that will actually pay you salary, right? And then they get surprised they have such a big tax bill at the end of the year because they've taken out this money from the business thinking they're receiving a compensation, which is okay. It's a really probably owner draw, but they're not paying any tax on it. So how do we avoid that? Also maximize our tax savings, right? So first of all, in order for you to receive a compensation from the business in terms of a W-2 salary, you should be structured as an either a corporation, let's do a C corporation, or an S corporation, okay? That is what will allow you to receive a W-2 compensation, okay? Now, if you are an LLC, single, or multi-member, we'll do that multi-member LLC, I should know this, right? Then you do not get W-2. You're actually not allowed to receive W-2. It just doesn't work this way, okay? Don't receive W-2. Instead, what you do get, according to your agreement, if it's a partnership, what's called a guaranteed payments. I'll try to write nicer. Guaranteed payments. I think the reason I have such a terrible handwriting is because I always rush, and it got so worse during over the years. It's unbelievable, especially because we type. But it's not an excuse, right? I should really work on my handwriting. But guaranteed payments if you're a multi-member LLC. If you're a single member LLC, you file Schedule C, you don't take out a W-2 salary. You just take out what's called owner draws, right? Owner draws. Okay, but there is no taxes paid on this when you take it out. So did I write ha? Crazy, man, I gotta work on this. Right, no taxes are taken out, so you have to submit quarterly estimated payments. So that's just in a nutshell. What we're going to focus on today is a W-2 compensation from either S-Corp or C-Corp. But what I'm really going to focus on the S-Corp section, simply because majority of the small business owners are S corporations, okay? Not C corporations. It's not to say that C corporations are bad. They are great. They are great, but not generally not for your main business, not for your main operating business, right? C corporation could be used as a legal shield, so to speak, to shield some of your income, shift over some income to a lower bracket, of course, which is outside of the scope of this video, but that's why you need to make sure you always have those tax strategies in place. So what we're going to do right now, let's see, yeah, that's how I get to a new page, okay? So let's talk about owner compensation, right? So I already said we're gonna talk about S corporation, W-2, owner comp. There's three things we're gonna talk about. Number one is that we're going to talk about reasonable comp. Now, I know you probably heard me speak on it a lot, and you probably know, oh, Boris, I know what reasonable comp is. Bear with me. Bear with me. All right. The second thing is that we're going to structure your health insurance. And we're going to talk about the biggest mistakes that business owners make when it comes to health insurance. Stick around because it's going to blow your mind, right? The third thing that I'm going to include here is reimbursable expenses, right? Personal reimbursable expenses. So personal reimbursable expenses, and that would include home office. If you think home office is a red flag, stop watching this video. I'm kidding. Guys, we live in an information age. We live in the age, COVID age, you want to call it. I don't know. Well, remote work is pretty much normal. It's not a red flag. IRS knows you have to work from home. All right. So for those of you critics out there, relax. We're gonna cover that in detail. Personal reimbursement expense. Then we're going to talk about vehicle and other expenses, right? That could other expenses related to the business. Related to business. Okay, perfect. The S corporation, let's see, W-2 owner compensation. The first thing I'm going to talk about is reasonable compensation. First of all, what is really a reasonable compensation? Basically, you just have to pay yourself a reasonable comp. As a business owner, just in general terms, what would somebody else doing your job be paid? Some business owners like pretty cocky, right? Like, well, nobody can replace me. You know, I can pretty much generate great income. Look, we're talking about your tasks in your business. Think about it this way. Think about it this way. As a business owner, myself, for example, we wear many hats in the business, right? That means we do administrative. Just today in the morning, it's 11:35 a.m. I've been in the office since 5:30 a.m. I did billable work, meaning to say client work, right? I shouldn't say billable work out loud. Client work. I had a 1-hour marketing with my team. I had 30-minute admin meeting with my team. Like all these things. Then I replied to some emails. Then I did something pertaining to our service contracts. That took another half hour. So I'm wearing many hats in the business, right? So that means all this time from 5:30 in the morning, I did take a 2-hour break, but from 5:30 in the morning until 11:30, right? I did 2 hours of tax and accounting work. Right? What did I say that I did billable? 1 hour or 2 hours? I don't know. But basically 1 or 2 hours of that accounting and tax work. The rest was split up between different tasks. So a tax accountant in New York City with my level of experience, probably whatever that is, I don't know how much they're making, but I can bet you they're making probably over $100,000, right? With being a certified public accountant and CPA and all that stuff. When my salary, my own salary, based on the reasonable compensation that I did by breaking down all my tasks, came out to like $96,000. Excuse me. And that is what I pay myself as a reasonable comp. The rest I take out as a distribution, right? And I'm allowed to because I've followed the IRS rules and regulations. Now, and that is one of the first ways you can save money on taxes. So if you're paying yourself $150,000, $200,000, that could be an appropriate salary for you. I don't know, but you would have to make an analysis. If you need to make an analysis with us, let me know. There should be a link somewhere below this video, probably. I don't know where we're going to post it. Maybe we can do that analysis for you like we do for all of our clients. But that's besides the point. The second thing you want to be aware of, the mistake that a lot of business owners make, they don't pay themselves enough to be at reasonable compensation. I've spoken to business owners that pay themselves $500 a week. I've spoken to business owners that pay themselves $1,000 a week or $75,000 annually. But really, based on everything that they discuss, they do in their business, probably more than that, right? So you want to make sure you're in compliance. That is the first way you can structure your compensation, audit prove it, and you're good to go. The second thing, right? So let me just put a green check mark on that because we spoke about that. Okay. So the second thing is health insurance. So what a lot of people don't understand, and business owners, not that they don't understand, they don't know it, is that when you own an S corporation, for example, let's compare C and S corporation, right? So we'll go back up over here, right? We'll do this and this. If you have a C corporation, you're allowed to take fringe benefits. Fringe benefits for yourself. It depends which ones, right? But generally speaking, you can do fringe benefits. That's one of the reasons people form a second corporation, a C corporation. Of course, it has to have a purpose, and there's a reason, there's a legitimate reason, but to shield themselves and be able to take all these fringe benefits. When you own a main operating business, like I said earlier today, you should have your operating business in an S-Corp. You cannot have fringe benefits if you are more than 2% shareholder. Can't do that. No, no. No, Jose. No, amigo. And like in Russian would say, net, right? No, it's a no-no. So how do you deduct health insurance when it comes to fringe benefits? You cannot, right? You cannot deduct health insurance if you have a group plan. Now, hold on a second. I'll show you how you can, but obviously you can't, right? Otherwise, I wouldn't be doing this video. But I just want to talk about the mistake a lot of business owners make. You have 5 employees and you decided to get a group health plan. You got a group health plan, great. Now you're saying to your employees, hey, group health plan, let's say single individuals, $500, married, it's $1,000. We're going to reimburse you 50%. And you're going to be like, I'm a fair employer. I'm going to follow the same rules that I do for my employees. I'm also going to get that. That's it's called under the cafeteria plan. Most likely your payroll provider is probably put together the document that you don't even know that exists. It's called cafeteria plan, and which allows you to have group health plan for your employees. And then you are being reimbursed for that health insurance. Well, actually, you cannot. Now, it's actually a good thing that you cannot reimburse yourself under the group health plan, meaning to say through the job-sponsored health insurance. It is a good thing, and I'll explain to you why. First of all, let's understand that you can't do that. As a more than 2% owner of the more than 2% shareholder of the S corporation, tongue twister, right? More than 2% shareholder of an S corporation, you can deduct health insurance only on your personal taxes, even if you own an S corporation. But in order for you to be able to do that, you have to include the health insurance as part of your owner compensation package and report it on a W-2, which will then be reported as your officer comp and taken off as a deduction. At the end of the day, works out great. The reason you would want to do that, number one, if you are deducting your health insurance right now without having it as an owner comp, you do not get a deduction and IRS will add it back during the audit. So by following the rule of putting it as an owner comp, number one, you do get a deduction. What color do we want to make that? We'll make that blue color, right? So we do get a deduction. And the most beautiful thing is that we save on FICA taxes. What does that mean? That the health insurance premiums that are part of your W-2 are not subject to FICA taxes. Quick example, if you pay $10,000 premiums a year, FICA taxes are about 15.3%. You're saving yourself $1,500 all by just following this little known IRS rule. And the reason I say little known, it's not really little known, but so many accountants don't follow this for their clients. And I'll explain to you in a second. But by following this, you save $1,500 off the bat without doing anything. And that's called proper planning and strategy, my friends. All right. Why do most accountants don't do it for their clients? I'll explain to you why. When do you come to your accountant to do your taxes? Go ahead. Yep. You get a phone call in February. Hey, we're probably going to need to put you on extension. And you say, oh, yeah, sure. I don't think my document's ready. Or you reach out to your accountant on March 10th, and he's like, oh, yeah, that's right. I got to do an extension for you. Then they do an extension. When they do your taxes are, he paid health insurance. How can we deduct it? Well, let's do it a little bit illegal and not include it on a W-2 because W-2s were already filed by January 31st. Can't make it an owner comp. Let's wing it, right? What's the right expression? Wing it and include it as a deduction, right? And first of all, you did not save on FICA taxes that we spoke about, which is right here, baby, right? $1,500. And you still got a deduction maybe, but it was incorrect deduction, which would have been added back. The reason most of accountants don't do it because this is something that has to be done during the year. In my firm, every May, well, actually, we didn't do it this May because taxes were due in May. In June, we're going to be reaching out for all of our clients. Now the season is over, making sure that everybody's health insurance for the owners is captured as part of the owner's comp. And if it's not, if there's any adjustments, our accountants actually log in with them to their payroll account and adjust it and fix it and make sure they get their deduction. So at the end of the year, we can maximize savings. That is proper planning and strategy. I always say, if you have a tax preparer, you do not have a tax planner. To save money on taxes, you need a tax strategist with tax planning tools. Anyways, let's continue. This video is going longer than I thought, but it probably has a lot of value in it, and I'm great that it does. Okay, the next thing we're going to talk about is personal reimbursement. So anyways, we did the reasonable comp, right? We did the health insurance, and the next thing is personal reimbursement expenses. Home office. Are you allowed to reimburse yourself for home office from the corporation? Are you allowed to have home office if you have another office location or workplace such as medical practice, law office, storefront, whatever that is? The answer is yes if you have an administrative home office, meaning to say you do all the admin stuff from your home office. Can you reimburse yourself? You absolutely can reimburse yourself for these expenses. What kind of expenses can you reimburse yourself for? Let's quickly take a look at it. You can reimburse yourself for rent or mortgage, depending on your situation. I'm going to abbreviate that. Property taxes, utilities. You can also reimburse it for HOA, home insurance, repairs on the home that affect your home office, cleaning lady or cleaning gentleman. I don't know what you guys do there, who you hire, right? We typically hire cleaning ladies. Cleaning and maintenance that also affects your home office. Excuse my terrible handwriting. What other expenses do we have with the home office? We got repairs, garbage collection, whatever that is, right? Lawn lawning that affects, if your customers come to your home, whatever that is, right? Everything that is related to that affects your home office is deductible, but properly reimbursing yourself. You cannot reimburse yourself just writing out a check for yourself. Oh, the biggest expense that I missed, if you own a home, which we don't see, I don't remember last time I saw it on clients, on the new clients that come in. You can actually depreciate your property for the home office. And that could give you a nice deduction that you didn't have before. All of that is reimbursable to you as part of your owner's comp. The business gets to deduct it as an expense. You do not get to pay any tax on it. No FICA tax, no income tax, complete deduction. Are you using your personal vehicle for the business? You can also reimburse yourself right on it. And any other personal expenses that are related to the business, you can include that as part of your owner's comp. So now, if you're paying yourself a higher salary, you went down by doing a reasonable comp to including health insurance as part of your compensation, giving you a deduction and saving you on FICA taxes, and you can now reimburse yourself for home office expenses. Now, one thing I didn't mention is in order for you to be able to take advantage of a home office expenses and vehicle expenses, right, you can you have to set up what's called an accountable plan. It's a plan document that you do not file with the IRS, but you keep it on file. That basically lets the IRS know, hey, I had this plan document in place, which allows the business reimburse myself and my employees for these kind of related expenses. The reason we want to have this plan document in place, because it's going to benefit us. We're going to be able to take home office deduction, my friends. And that concludes the training for today. I hope you enjoyed it. I would love your feedback. If you're watching it on any of the platforms, please like it. Subscribe if it's on YouTube channel, because if you like it and subscribe it, that will give me more energy to create more content. As you see, it was not an easy content to record, meaning to say it took about 30 minutes. I don't know how many minutes am I recording it, but at least 20 minutes, right? But if I see that it's valuable, people find it valuable, people love it, and we're getting likes, we're just going to keep producing more and more of a great long content that makes taxes easy for you. Thank you so much. Now I got to figure out how to stop the Zoom recording. I hope it was actually recording this whole time. All right, I think it was. Till the next time.